things happen, right? Nobody knows. That's just the algos kick in and everything gets going. Today is going to be slightly tricky. We are oversold. Theoretically, we should bounce, but we don't have any internal price action indicators or anything that says like, hey, we're at some monster cock bounce point, right? I mean, we are oversold, but we're not like a historically oversold kind of thing that leads to like sustained bounces. I do think that we have some locations where we can try some things, which is like, we have the SPY here. You're talking about 442 is going to be a decent spot. I think that's going to be a good solid spot right there. Hold on one second. I would expect this level to get defended just because of how oversold we are at, this particular thing. Now, the manner of the bounce or how long it lasts, it could be from minutes to a day or two. Like, we really don't know. We'll have to let the price action dictate for us. The one thing we are seeing is every single time we see strength in the market, right now, we're fading off, right? So the power's in the shorts. And I mean, that's been a go-to play for us for months, basically, or for a month, is to fade off all these pops into the market. But now we're getting into these levels here where I think it's going to be a little bit juicy to start, especially with the gap down. We get one flush off at the open. We can try for a little bit of I think we're going to have to be able to try for a little bit of a bounce. Guys, Meatloaf also passed away. The greatest singer-songwriter of all time. I mean, one of the first American love ballad sex machines. So pray for the soul of Meatloaf. I'm probably sure he's very happy he's not witnessing this market crash. Dow Jones has broke under the 200-day moving average, but now look, you got a candle complete outside the lower Bollinger Band. You got the stochastics running at 2. I mean, this is like historically a spot where we try for a little bit of a long. So let's keep an open mind today. I was hoping for a bigger gap down. If the QQQs, if we had it like a 2% or something like that, it would have been a gimme long, probably the first tick. Because this is a little bit light, we may get a little bit of weakness at the open while the market gains a little bit of footing. The big thing is not to kind of short into the hole and see what's going on. Now, also, it's earnings season. So there's been some good PR plays. So if like sitting there staring at the market and trying to figure out like, is the market going up, down, like it's just too much volatility for you, which is totally fine. Alcoa kicked off earnings yesterday, right? That's usually the first company or bigger companies that starts earnings. So we've got plays that you can do where you don't have to necessarily, watch the market too much. Let's take a look at, what kind of news plays we got there, and then we'll move into some of the bigger boys and get this party going. Man, I can't believe Meatloaf is gone. I mean, next thing, as long as Celine Dion's alive, I think we're still in a good spot. All right, let's take a look here. So this is a turd. Like, you can't really play this. They got pumped, $26, came all the way back. Like, there's not really anything to do beyond the fact that this just has a really cool name, Blue Star Food Court. And then not really anything we can do on this. Save Foods. I don't know what's going on with these things, but this is no small caps on Fridays. Look, between a market crash and you trading small caps on Fridays, I mean, your whole life could be in shambles at that point. Your IRA is getting dusted. Your 401k is getting dusted. Your confidence is getting dusted. Next thing you know, you've only got your trading account left because everything else is getting dusted. And then you go in and go balls deep on Blue Star Foods Corp. Now it's a triple whammy where, your longer term accounts are getting smoked and your short term accounts are getting smoked. I mean, at that point, you've just got to give up on life. There's not much you can do here. You got a small gap up on Peloton. Hey, this had news out yesterday that, they're drawing down some kind of production. They claimed it was a rumor, so nobody really knows what's going on. I think this is probably going to be in play today. Let's see how it reacts around this kind of, 23, 24 range. A lot of times you see something like this and be like, well, how much lower can it go? A lot lower. We're in a liquidation market anyways, in a different market. Maybe the reaction would have been a little bit different than $10 yesterday, but big hairy India buddies, we're not in that market. So let's keep an eye on this. I wouldn't even be surprised to see this thing squeeze a few bucks today. And then, I'd watch for maybe some type of rollover or something. The SSR is going to be on this. You can't short it even at the bid. So, you got to be a little bit careful. Boyle, this is a natural gas ETF. Jump. For those of you guys that can't short in your accounts, you're doing your IRAs and stuff like that, you can use these inverse ETFs. They move pretty good, like SQQ. You've got UVXY. These will move pretty good. UVXY sucks to trade, though. There's no getting around it. Like, it's just a dick to trade. And the margin stinks on it, so there's easier plays to do if you want to short. But, you can always do SQQ or use the SPY version of the XXX. You can see all these things there. So, like, everything that's popping up is an inverse ETF. Let's talk about just a regular watch list, and let's come up with a good, solid, God-fearing Christian game plan so that we can make some money on Friday. And let's see what's going on. Let's first talk about just some longs, right? We're going to possibly need some longs today. If we need longs, which we do, let's start with the stronger ones, and then we'll go into the rubber band setups. The rubber band setups are ones that are so oversold that, we have to try for a bounce, essentially. So let's talk about just the stronger ones. First of all, this SoFi had some banking charter news out. It's been it was a monster yesterday. It did roll over with the rest of the market, but look ahead. First of all, it had big liquidity, a 200 million shares plus volume, good liquidity on it. I think this thing is probably in play for a little bit of time. So let's, keep this on watch. This might be if the market bounces, this is a good candidate for red to green. It's only opening down 10 cents anyways. If the market starts to rip at the open, which it very well could, then this will be a good, solid, easy play because it's got liquidity in it. I normally don't like to trade like the lower price ones, but this is like $11 billion company. It does tons of liquidity and you can get like pretty good size on it. So I would roll with this one. It's got good relative strength on it. Beyond that, you got China names that are still holding up here. This Baidu's got a little bit of a range break. This is also the big hairy butt is right. The market has to hold or bounce. Baidu's got a level here of 165. Baidu can trade a little bit herky-jerky at the open because of a lack of liquidity, but you've got a clear level here, like 164, 164.50, 165 zone. We'll call it a zone of love. I think that might be worth a little bit of a gander. Right beyond that, PDD's holding up. It did fade off into the close a little bit, but the chart is awesome. It needed a rest day because it's up 4 days in a row. You're coming right back into the 50-day moving average, and you got a load of support like sitting in that 63, 65 range. If we need a bounce, this is also a potential. Baba's also, right, this has been a good trader for us. You're coming back into support here, and you have an overall longer-term bottoming pattern. You can see here, these are volume accumulation days, right? So distributions when red candles are in excess of, right, the up day volume candles, which are the green candles. We're actually in a nice accumulation here. If you look at like anything like unbalanced volume or anything along that end, the trends are proper on this one. If we need a bounce, this is also something that can work. It also has just good liquidity. Like normally Baba in a hot market is not that fun to trade because the float's too high. The range on this has been proper. It's got a $6 ATR. So for the most part, it's going to be, for the most part, I think this thing probably holds. Samka, you don't need those ETFs. Are we shredders or non-shredders? We don't need those 3X ETFs because the margin stinks on them. Good. Now, China stocks, you've got SoFi, and then let's talk about rubber band plays. So rubber band plays are like, okay, what are the stocks that are the most oversold that also have, right, the liquidity and things of that nature? If you want to do a rubber band scan, you can, do these kind of things. very easy too. So you look for like, say, stochastics under 10, price history under the lower Bollinger Band, and then, you want to put like, essentially some kind of volume. So you can see here on the rubber band scan, and if anybody needs this, I was just playing around with this the other day. We can definitely do that. So then like, okay, so you got 47 stocks on a rubber band longs. Rubber band long, to trigger a rubber band long, you need stochastics under 10, candle below the lower Bollinger Band, and then, you can sort it by 5 days, right? To see like what's down the most the last 5 days. So you can see like, you want to eliminate really all these cheaper ones, and then you can start going in. So like, let's just add a secondary filter on this, a price filter. Let's just say, because you don't need cheap stocks in this market. It's really a misnomer. Let's just say price history greater than 10. All right, so now you've got a handful of names here that are showing up. So 27 names, right? Now let's, like you see here, you got all this kind of junk in here. So like we need more liquidity. So like, let's change this from 500,000 to 5 million, right? And that'll give you, now look, some of these are because we're using pre-market data. So when you run a scan, what you want to be doing is take the regular data, right? And then take off. You want to use the regular data because it's going to show all the stuff on pre-market. Now, let's like make this like, let's just add a 0. That's probably the easiest way. So now you got 35 names of stocks that are doing over 5 million. So now these are like your rubber band scans. So these are the most oversold stocks in the market. So you can see like this thing's at $60, gets a 33, and it's got enough liquidity in it. Like that's good. mRNA. This is, it doesn't look like much, but this is $250 a couple days ago. This thing's dropped $100 damn. That's a classic rubber band setup. Also with the rubber band setup, like you want to see, right, like a gap down the next day and so on and so forth. But like these are pretty good. So, like Rivian is a rubber band long. Oh, Donkey Kong. See this Marvel, like this is another one that you could work. AMD, I think this is, we have good success trading AMD anyways, and you're gapping down to like $120. This is probably, that's top of the line. Qualcomm, see this lows, like this is a down 5% yesterday. Home builders have been getting smashed too. Rising interest rates. MU, I think this is actually the classic one, because my favorite rubber band setups are the ones that are like sitting like near a support, because it can just remount and then long. And so you can see here, like most of the candles below, below the Bollinger Band, you get 7 stochastics. With the gap down, you're going to be probably at 3 or 4. Like that's a good potential long. Home Depot. See this, like you're on the 200 SMA. Like keep an alert here. It's not a sexy name. This you're going to have like probably a really good margin on it anyways. And if you're on the 200-day moving average, like that's, you have a location to kind of base your trade around. That makes it a lot easier. So let's flag that. Let's just add some of these on here. Dun, 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 dun. Man, that's nice. I think the HD might be like one of the better ones. Dun, 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 dun. PayPal, jump, HPQC. This is just not, this only dropped $4. So even though it's technically a rubber band setup, it's only dropped like $4. And I want more destruction, right? We want the stuff that's done the most. See, like Apple's like, this is okay, but it's like, I want more. I want something that's down more. Like see that TAS, mRNA, like these are like, okay, last 5 days, these things are getting their cock shredded. You can be either shredding or getting shredded. These are all getting shredded. So this is ideally a good way to go about this here. Let me, yeah, you can have the scan. Hold on. There you go, Zaman. And you know what? This is like the first time I've used this scan since the coronavirus time. So if you don't have to use it that often, but this is pretty good. Even this task, if you want a little bit of a cheaper stock, this is a very, very classic rubber band setup. This is $50. Now you get down to about $26. I mean, that's pretty good. That's like a very good candidate. Your 9 EMAs at like $37. We can be dicker and dealing on this thing, dicker and dealing and wicker and wheeling. You got some good potentials. Now let's add one more long. Let's add this laser had really good relative strength yesterday. Got rejected at its MAs, but if the market does hold up, that could be a potential long too. The SoFi is just much cleaner. I think we stick with the liquidity for the most part. Let me see. Somebody's been asked about Ford. Hey, you know what? Ford is also on support. That could actually work. Like if you want something that's a little bit slower, that has like really, really good liquidity, then right, this Ford is on its 50-day moving average. If you want to try a long, that's the way that we got to go. Now, the big hairy butt of today is going to be like, okay, so the market's gapping down. Even if we bounce, what ends up happening, like once we get into like kind of the EMAs and stuff like that. So what I mean by that is like, let's just take an example of when the market actually faded, gap down, decent size a few days ago, right? So this would have been on the 18th, so what you can see, and this is actually very common. So the market gapped down and then it kind of just meandered around, and this can happen on a gap down day. So you got to be careful. So see how it's like meandering down, and it's also sucking in shorts down here, but the gap down kind of took out all the range. And so the next thing you know, it squeezes up and you're like, oh, fuck, bounce time, right? And so now you get all excited, like bounce time, bounce time, bounce time, and it plops into the EMAs and then just rolls, right? And it pops into EMAs, rolls, pops into EMAs, rolls. And that day, if you remember like how it was feeling, you're like, oh man, the market's really been in the same spot the whole day. And it's like, no, the market it has been trending. You just have to discount this part. Think of it as like when it started to hit into the EMAs, then it's just flush, pop, flush, pop, flush. And then, when you look at it in that context, right, it ended up being a downtrend day. But there was this kind of whoop right at the open because the size of the gap down was 7 points. Today, the size of the gap down was like 4 points. So we could meander around and do that. So that's going to be the big question for today is like, okay, at some point, if we build into a bounce, what happens into that first pop? Does it just get fucking dusted or does it rip through? And that'll give you guys, a telltale kind of sign of what's going on. Mark out this level at 442 on the SPY. That's probably where we want to see and look for signs on shorter term time frames if we're getting defended or not, right? You want to start going on shorter term time frames, start to look at the price action, look for 1, 2, 3 patterns, W patterns, rounding patterns, whatever, right? We want to look for that hold there on shorter term time frame to match with what's happening on the bigger term time frames. In a hot market, you don't ever have to sit there and stare at indexes and do this kind of analysis. You don't have to look at market breadth. You don't have to do any of this stuff. But in a shitty market, I want to say shitty, this has been probably the cleanest trading month of the last couple of years. So it's been a good market. It's just as long as you're shorting properly, it's fine. But this you have to do a lot more market analysis than you used to have to do, like in parts of 2021, like when small caps are going and stuff, like you don't have to do any analysis, right? You just turn your gapper scan on, see what little turds flying around, and you can go for it. Now let's take a look here. So you can see market breadth is really, really nasty too. And by the way, this is a no swing trading environment for the most part, and it has been since, I would say, late November, at least in tech stocks. If you were in oils, fine. Beyond oils, some type of energy names, there's been a no swing trade environment. Even, for cryptos, like at least on the long side, it's been a no swing trading environment. If you're a swing trader, it's been an okay swing trading environment as long as you're shorting, right? But it's, a lot of people don't like doing that on the swing side. I don't short on the swing side either because you can just get the range on the day trades. But you can see here, like the T2108, historically, you get a bounce when you get under 20. So like when, if you really look here, like when you started to get a bounce, you're really getting it under these kind of 20s, close to 20 ranges. So we're at 26 on the T2108. Anything under 20, a sharp thrust under 20, ideally like 15 or even 10, that will lead to a more sustained bounce of maybe 4, 5, 6 days. We are in a very, very long year. You can't trust any bounce in the market. If you think about Like this bounce looks so epic. It was a huge bounce for 3 days, and then it just got gutted, right? You had this big bounce here for 4 days, right back into the highs. And that sucks in all the longer term traders because they see it and they're thinking, shit, it's a breakout, but it's not. That's a sucker's breakout because you're in a distribution market, right? All bounces will fade. This whole area has been distribution, right? Look at the volume patterns. Look at the percentage of breakouts versus breakdowns that are happening. We've been in a bear market for quite some time. If you look here, this is market breadth. January 2021, market breadth was at 76. It's been going down every fucking month. So even though the indexes were hanging out, market breadth has been going down, telling you that the actual stocks participating have been going down like every single day. And that's what makes the overnight holding such a challenging year, because the market breadth has been stinking. So unless you are this, in Tesla, Apple, Microsoft, give or take, then you weren't really having any fun, and you can still trade. You just have to be concentrated in those handful of stocks here. So now you can see here, like, market breadth is starting to hit down into some very, very oversold territories. But look, in the coronavirus times, we got all the way down here. So we still, we're not necessarily like that oversold, but we're getting there. So this is just different things and different scenarios that kind of play out today. Look for, so in summary, look for, right, SPY 442, SMH. If the SMH gets close to 270, these are going to be good locations to potentially bounce. And then we'll see like what's going on here. If you're having trouble trading in this market, well, it's a bear market, right? Like that's a natural thing. You gotta just keep dusting off those skills. There's a lot of money to be made in these, as long as you're trading right and you're not right farting around for pennies. You're playing for dollars. Let's go have some fun today. Jason, you could, if you got a real big flush, you could probably hold for a day or two. But man, do you want to? It's more of a question of like, you could, but do you really want to? If the SPY hit the 200 and held and the SMH hit 270 and held, probably 2 days into the 9 EMA, give or take, I think is, so there's upside. By the way, like say the SMH goes from 270 to 290. I mean, that's 20 points on a 300, that's 6%. That means the individual stocks in that would probably move up 20%. So it is definitely worth it if you can get it. That's something to be just mindful of. Hey, Dance, there are good end of day setups. You can do day-long consolidation plays. Well, day-long consolidation plays are like when you have a low and you kind of keep testing that low throughout the day. And then like see at the end of the day, like you rip through. Those are like really good kind of flush trades. The crypto is also in a no swing trading environment. All the charts on cryptos are dusted. I don't want to talk about it because I fucked up my trades yesterday. Man, I had 3,200 sold short, like a 138 average. I covered at 140 like a chode. And then I went to the gym. I came back. It was at like 125. I left not a nice car, but half a nice car on the table. It's like I just went to the gym for a couple hours. I come back, it's at 125. I'm like, oh, there's 40 G's down the table. You know what? I had to stop at 143, which is the right area to put it. And I pulled it because, I didn't want to be at the gym and be that guy like playing on his phone the whole time. Because I do that sometimes. My trainer yells at me. He's like, dude, are you here or not here? I'm like, oh, I'm here. All right, let's go have some fun today, guys. I'll be in the chat room till noon. We're going to give this thing till noon. We're going to make some money and then we're getting out of here. It really does. I'm an expert. All right, let's have some fun here. Let's move to the 6-window layout, start filling this thing out. Let's move this thing, see what's going on. So, yeah. NVIDIA. I don't think we need. I think this Ford is probably at a decent spot. HD also. By the way, if we do need shorts, you got UPST at a big level here at 105. And then SC has a level here at 167. So if we need some shorts, those are the two good spots right there. Oh, and be mindful because Netflix got dusted on earnings.